It's Thursday, November 4th. You're watching the Daily Market Comment by Ref Boyajian. I'm Cristina Marujos, and thank you for joining us here at XM.com. The Federal Reserve announced the long-awaited tapering of its emergency stimulus on Wednesday, confirming plans to reduce its asset purchases by $15 billion a month, starting later this month. But there were no tantrums in the markets, as the decision had been telegraphed well in advance. More significantly for investors, Chair Jerome Powell soothed nerves about a possible early rate hike, saying we can be patient on rates. There was a further sigh of relief for jittery investors from the Fed sticking to its transitory narrative of high inflation. Equity markets cheered the Fed's perceived dovish taper, sending shares on Wall Street to new heights. E-mini futures are pointing to more gains for today, though Dow futures were struggling a bit. However, there's been no major shift in either Treasury yields or interest rate futures after Powell's reassurances, underlying the disconnect between the Fed and the markets. Money markets still imply 2 rate increases in the second half of 2022, and short-dated yields are only down marginally post the Fed meeting, as Powell left the door open to adjust policy should there be signs of higher inflation becoming more persistent. Those hawkish expectations are bolstering the US dollar, which is powering higher on Thursday, pummeling its rivals, with the euro taking the hardest punch. European Central Bank President Christine Lagarde doubled down on her attempt to push back on expectations of rate increases in 2022 on Wednesday, saying that the conditions to start raising rates are very unlikely to be met next year. The pound was also under pressure, reversing lower after failing to crack the $137 level earlier in the session. The Bank of England is due to announce its latest policy decision later today, and it's a close call as to whether policymakers will vote to hike rates by 15 basis points. There is also uncertainty around the meeting of OPEC and non-OPEC leaders, as it's possible the cartel might offer some compromise to the U.S. in easing supply curbs more rapidly to alleviate the global energy crisis. However, the main driver in the oil markets right now is news that Iran and the West have agreed to resume talks on reaching a nuclear deal on November 29th. Having tumbled sharply on Wednesday, WTI and Brent crude futures are trying to recoup their losses today. This was today's Daily Market Comment here at XM.com.